taking place out there. So that was very gratifying to hear, especially after the last few weeks. I know there's a lot of fear, uncertainty, and doubt evolving in the world out there, but we're doing a lot of original research. We have a 5-year investment time horizon, and we are truly excited about the opportunities that the last few weeks have presented us. As you know, our minimum hurdle rate of return for any stock to enter our strategies is 15% at a compound annual rate over 5 years. That's a doubling over 5 years. Well, you can imagine what has happened over the last few weeks. Market activity alone has taken that projected rate, and again, it's just a projection. We could be wrong. The world could end. I'm sure I have compliance monitoring me very carefully when I say this, so I want to say it correctly. But according to our projections, what these last 2 weeks have done is handed those who are averaging in to these sorts of strategies, any innovation strategies, a gift, because we do believe we're on the right side of change, and disruptive innovation, transformative innovation is going to deliver exponential growth trajectories for many of our companies. In fact, most of them. The growth rates are enormous, and I think some people find them unbelievable. To give you an example, electric vehicles. We expect unit sales of electric vehicles globally, including China, to compound at an 82% annualized rate during the next 5 years. Most people, when they see a number like that, they'll just say, I don't believe it. It's not possible. And the reason for that, the reason we face that skepticism often, is because of where the automobile industry is right now. It's very mature. It's not growing. In fact, we believe it has peaked. And that means all cars are in secular decline if we are right that we are moving into more of a ride-sharing, both human-driven and autonomous during the years ahead. So this idea that electric vehicle sales could grow at an 82% annual rate, just not going to believe it. And so that skepticism festers, especially, I would say, among institutional investors whose analysts on the auto sector, for example, are mostly value analysts. So there are a lot of those disconnects in the world that are creating great opportunities for us. We do also get questions about our disclosures at the end of every day. Well, we have a transparent, we were approved as a fully transparent, active equity ETF. And there are not many of us out there. And so I know what we're doing. Again, we just have to keep educating. We have to disclose our holdings at the end of every day. And so we do. But we also go one step beyond, because we know anyone who wants to understand our trading activity could reverse engineer our disclosures at the end of the day. So we figured in the early days, especially because we wanted market makers and authorized participants and prospective clients to understand what we're doing so they don't feel they'll be caught flat-footed, shall we say, from a trading point of view. We said, we'll publish our trades so you understand and you're not going to be off sides. We want this ecosystem to work well around our strategy. And as I said, it has. And I think disclosing our trades at the end of every day has become very important to many people who own our strategies, participate in ARC strategies, but also for others who don't. And, you know, it's developed a life of its own out there. There are YouTube videos and blogs and so forth around it. And what I think this is doing is bringing the retail investor, particularly the young retail investor, into the investment realm in a healthy way. They want to understand what is going on. They love transparency. And so we tried to provide as much of that as possible. And we are focused on exponential growth opportunities. We believe a sub-segment of the auto industry is going to see exponential growth for the first time in 100 years. And so that's our sole focus. Institutions have hired analysts to focus on an industry that is mature, and now there's a transformative, really revolution taking place that will alter the auto world completely. There was a lot of skepticism. The auto industry itself didn't expect electric vehicles to amount to much of anything I think they thought it wouldn't take until the mid-20s. Well, it's here. And we began to invest aggressively in this space on that assumption as we saw battery pack system costs decline as rapidly as they have been declining. And so I think that kind of tug of war between the traditional backwards-looking world, which is based on benchmarks, and certainly the top positions in benchmarks are where they are because of past performance. Ark is focused on the future, especially on the future that involves transformation. And so benchmarks, I think, have been an impediment, and setting up research organizations in the way they've been set up is also an impediment to some of the new ideas. The other difference between what Ark is doing, what a lot of retail investors focus on, is time horizon. I know that institutional investors are much more short-term, many, not all, and they're very focused again on the benchmark. So this idea of being graded every year based on how well an analyst or portfolio manager did relative to a benchmark is quite constraining. The luxury we have, and retail investors have, is retail investors really don't have career risk. We might have a little bit more of that, of course, given what we do, but we have a 5-year time horizon. That is a luxury. That's a luxury. And the difference between linear growth and exponential growth in the early years, when electric vehicles are at 500,000 a couple of years in sales globally, last year 2.2 million, in those early years, because the bases are so low, there doesn't look on a graph to be that much difference between linear growth and exponential growth trends. You give that a few more years, and the difference is quite surprising. I mentioned that 82% growth rate. We really believe that's going to happen, especially now that China is pushing hard. I don't think traditional auto analysts still believe that could happen.